Okay, here we are. So excited to have Matt Hougan, CIO of Bitwise, here joining me live. I am Camila Russo, founder of the Defiant. It's a really exciting day. Obviously, the launch of Ethereum spot ETFs. So, Matt, welcome. Thank you so much for joining me.
Thanks, Cami. I'm excited to be here on ETH ETF launch day. It's a big day.
Yeah, so just getting your initial take on the day. Was it a success or disappointing, or what you expected?
Yeah, I think it's a big success. I would say it moderately exceeded my expectations. So, going into this, obviously, I thought these ETFs would be successful. You had the Bitcoin ETFs, the most successful ETF of launch of all time. Bitwise wouldn't have worked to launch an Ethereum ETF if we didn't think there was demand. So I thought it would be successful. But as we're talking right now, we're close to $900 million of trading volume. Maybe creeping up towards $1 billion by the end of the day. That would be the second largest ETF launch of all time from a trading volume perspective. And yeah, like I said, I think there was some people were worried that these ETFs would be a dud. They're definitely not. They're a big success. And I think that's going to continue. So I'm very happy with where we ended up.
So close to $1 billion, 900 million as we speak. That's huge in terms of global ETFs, and apparently, like we saw with Bitcoin, hugely outperformed initial expectations. It came as the most successful ETF launch ever, outpacing gold ETF and other successful ETF launches, which signals there's clearly demand for crypto among institutional investors. And then for ETH, it's also successful in terms of overall ETFs, but in terms of Bitcoin, which was the biggest success of all, what if it comes to a billion or 900 million? What would that be in terms of as a percentage of Bitcoin's first day volume?
Yeah, great question. First, because I can't resist, I have to share a comparison to normal ETFs because us, in crypto, we're so spoiled. And I come from an ETF background. I've been at Bitwise for 7 years. But before that, I spent 15 years, including as CEO of ETF.com. So that's my, original turf. The median ETF that launches does about $1 million in trading volume on day one. So when we say these are a success, it's 1,000-fold bigger than the average ETF, right? So just to set the context, Bitcoin was like way up here, and these are way up here versus normal. So huge success. Vis-a-vis Bitcoin, the Bitcoin ETFs, biggest launch of all time, did $4.6 billion in trading volume on day one. So at $1 billion-ish, you're talking, low 20 percentiles, 22, 23, 24%. Which is not far off of Ethereum's market cap versus Bitcoin. It's a little bit lower. That's what I expected. But it's in line with sort of optimistic expectations of what a very, very, very successful launch would be for Ethereum.
Do you think we should expect this ratio to continue going forward? Like, will Ethereum ETFs drive around 20% of Bitcoin ETF volumes?
Yes. I don't just say that, right? So there's some data on this. We're not, I know we think of ourselves as the only country. We're not the only country with an ETF market. If you look in Europe, they have Bitcoin and Ethereum ETFs. If you do the ratio of assets there, Ethereum ETFs are about 22% of the combined market. If you look in Canada, they have Bitcoin and Ethereum ETFs. If you look at the ratio there, it's 23% of the combined market. From a market cap perspective, it's more like a third, but in both of those markets, ETH is about low 20 percentiles. I think that's what we're going to see here. If it's 20 to 25% of the Bitcoin ETFs, it's still the most successful ETF launch of all time. And of course, the market cap is lower. So, the same dollar amount of flows will have a much larger impact. So it's a big deal. It's a huge success. Yes, I think this is where we will see it continue.
Makes sense. Okay, and then if we expect that, then what will the estimated dollar amount of flows be?
Yeah. So our estimate is that these ETFs will pull in $15 billion in their first 18 months on the market. The Ethereum, the Bitcoin ETFs have pulled in $17 billion in their first 6 months. We expect that to continue. Usually ETF flows start slow and build over time. So I expect those will end up, 50, $100 billion. And ETFs will be 20% of that. So, we think we could end the year with, 5+ billion inflows, which I know for crypto people doesn't sound like much because we've been so spoiled by these Bitcoin ETFs. But, that's more successful than the NASDAQ 100 Qs, one of the largest ETFs of all time. It's a massive amount of money. So billions into these ETFs this year, more billions next year is what I would expect.
Is there any factor of seasonality affecting the launch? Like we're in the middle of summer, could we see that ratio increase over time?
Yes. Yeah. For two reasons, it could increase over time. So absolutely, summer is a terrible time to launch a product, right? The SEC is in sense doing us no favors. Conversely, January is a great time to launch a product because you have a lot of money in motion at the start of the year. People have sold out of positions to realize capital losses in December, and then they have money that they're looking to invest in January. They're setting up their portfolios. It's probably the best possible month to launch an ETF. If you go to the middle of the summer, advisors are at the beach, family offices are in Monaco, right? People are doing different things, and they may not even pay attention until you get back into the fall. So yes, I think you could see this expand over time. The other reason I think it could expand is there's a segment of the professional investor market that ETH will appeal to more so than Bitcoin. And that's a slower burn. So, when these ETFs launch, it's often a lot of retail and a little institutional. And then over time, the institutional grows vis-a-vis the retail. And if you think ETH will appeal to that audience, then you'd expect those numbers to go up. We could end up a third the size of Bitcoin on Ethereum. That wouldn't surprise me at all.
Interesting. I'd love to double click on that insight that there's a group of investors who might be more attracted to an Ethereum ETF than a Bitcoin ETF. What do you think those investors are looking at?
Yeah, very simple paradigm. If you think of Bitcoin as digital gold, which many people do, and you think of Ethereum as a tech play, and then you look at the average investor's portfolio, 100% of investors, or 95%, have exposure to tech in their portfolios, and a much smaller fraction have exposure to gold, right? Everyone owns tech. It's part of the S&P 500, right? It's part of mainstream.
The biggest part, right?
Yeah, exactly. It's the largest single sector, and it's in the media. Not everyone owns gold. It's an alternative asset. The very name, alternative, means it's a smaller segment of the portfolio. It's not the mainstream chunk of the portfolio. So I just think from that perspective, this technology play. And then the second thing is, we've seen BlackRock launch a tokenized fund on Ethereum. We've seen PayPal launch stable coins that are issued in part on Ethereum. We see these mainstream TradFi firms interacting with the Ethereum blockchain as they look into tokenization and stable coins and DeFi and other things. I think that creates a patina of, a positive patina on the Ethereum space that may draw some people in. Now, we see that for sure in Bitcoin as well. You see Larry Fink on TV talking eloquently about Bitcoin as a monetary asset. Larry Fink, of course, the CEO of BlackRock, the largest asset manager in the world. So there's some of that too, but there's some part of ETH that I think will benefit from the embrace we're going to see from traditional firms of that public blockchain.
And now that BlackRock also has an Ethereum ETF, it's, there's a potential there that Larry Fink will also be talking about, he'll also be talking about Ethereum on CNBC and, in mainstream financial media.
That's exactly right. And also there's this second layer underneath that. I'll give you an incredible fact. Bitwise, we're one of the larger crypto asset managers, but we're a fraction of the size of BlackRock, obviously. Manage about $4 billion in assets. We do 20,000 meetings a year with financial advisors and family offices. 20,000 times during the year, there's someone at Bitwise who cares about crypto, educating these advisors about what Ethereum is. Those conversations are ongoing today. I spoke with hundreds today through various webinars. if BlackRock's doing that too, and these other firms are doing that too, those are a lot of conversations taking place that you don't see. So you see Larry Fink on TV. I bet he will talk about ETH. It's notable that they launched their tokenized fund on Ethereum, not on a private blockchain, right? They're clearly embracing this idea. But behind them, there's this army of other people doing meetings as well, which is equally as important.
So what is the pitch that, like firms like Bitwise and maybe BlackRock and others are, what's the pitch that you're making to institutional investors?
Yeah, I think there are really two. Like the first, this will annoy crypto people, but the first is diversification. No one owns one stock. They own a portfolio of stocks. No one owns one bond. They own a portfolio of bonds. Why would you do anything different in crypto? Why would you only hold one asset? Why not create a diversified portfolio? Right now in ETFs, you can do that with Bitcoin and ETH for an expense ratio of 0.20%. It's an incredible deal. So I think many traditional investors just want that. Let's diversify. The second level pitch is to understand a little bit about what ETH is, right? ETH is a technology platform. It's a picks and shovels play on many of the most exciting applications in crypto. If you're interested in tokenization, that's taking place on ETH. If you're interested in stablecoins, largest issuing platform is ETH. If you're interested in DeFi, most of that is on ETH. If you want exposure to those trends, which many investors do, you need to buy some ETH, right? I think it's as simple as that. There are many more layers to that. You can talk about cash flow based analysis and those sorts of things, but it's diversification and then this technology platform for the most exciting applications in crypto. And I think that's pretty convincing.
For sure. So I think I'm finally kind of seeing a consensus around a narrative for ETH, because for the longest time, I've been hearing this complaint that the narrative for Bitcoin is so clear, it's digital gold. And that's, a story that you can tell very easily and people understand. But for Ethereum, it's always been harder to tell the value prop for a traditional institutional investor. But I've heard this a few times, that it's an application, it's a platform for applications. And I think that's simple to understand. I've heard the analogy of like Ethereum is the iPhone, and there's many apps that can be built on it, something like that, but in a decentralized way. So it's like a platform for decentralized applications, for applications that don't require intermediaries. If you want to go like one step kind of further, but I think that that'll be very impactful for the Ethereum story going forward. Just like, a simple narrative that people can understand and buy, basically.
Yeah, I love that. I think that's exactly right. I think the world's coalescing around that narrative. And I understand to deep Ethereum fans that there's part of that that's sort of like vaguely offensive, because ETH is also money. It also has monetary attributes. It also has a very interesting inflation schedule and net zero issuance over the past year. And there are many people invested in that narrative, and part of that appeals to me too. But when you're making this initial pitch, it's easy to wrap it in this initial bubble that captures like maybe 70% of what ETH is. Just like digital gold doesn't capture all of what Bitcoin is either. But I do think those simple narratives really are helpful for people who aren't familiar to the space to sort of understand what it is at a top level.
And for those who are sold on this initial narrative, but then who look a little bit deeper and find out, like Ethereum is a proof of stake blockchain. There's this opportunity of staking ETH and getting a yield on this asset, but ETFs are not providing that. Do you think down the line that might be a drawback for these specific ETFs, and would that prompt investors to maybe find other investment vehicles?
Yeah, first of all, I hope so, right? Staking is really important. And there's nothing that we love more at Bitwise than people who self-custody assets and participate in the blockchain, right? That's the native experience of Ethereum. Without that, Ethereum, the ETF is worthless, right? The ETF is an access vehicle. So I do think some people will come into the ETF and graduate to holding ETH directly and staking it themselves. but many people are comfortable just holding some ETH as an allocation. I think a lot of us at Bitwise hold ETH in 3 ways. We have some ETH that we stake. We have some ETH that's just an investment, and we're just looking to get the beta returns of ETH. And then we have some ETH that we use, right, on a day-to-day basis. And I think, as you mature in the space, you'll certainly do all 3 of those things. I would love for people to come into our ETF, ETHW, get to know ETH, and then also, hold it directly and actually use it in applications. That's my dream. But I think the ETFs will do just fine. There's a massive market just for holding them directly in a brokerage account, and there are plenty of people who will choose to do that as well.
Makes sense. So it'll be maybe a gateway for people into crypto, and then from there maybe they'll self-custody, maybe they'll stake that ETH. But holding ETH ETFs is just like a simple way for those looking to hold their first crypto asset.
100%. I'll make an analogy to actually gold. I'll go back to 2004 when the gold ETF launched. People worried about this too. Won't people either stop holding gold directly, or won't they, move from the ETF to holding gold directly to self-sovereignly holding gold bars? What we actually saw was the ETF was hugely successful, ended up being a $100 billion market, and the number of people who hold gold directly soared, right? Both of those things happened. And the reason it happened is the ETF made gold more of a mainstream market. It brought people into the market, and then some fraction of them decided to do it directly. But both markets grew substantially. And that's what you're going to see here. ETFs will grow, self-custody will grow, using it in wallets will grow. All of those will grow together. The space will just expand more than be competitive.
So that's a good segue to a question I wanted to ask you that already touches on this, but what do you think will be the impact of having an Ethereum ETF on Ethereum, but on crypto more broadly? Like, what's the significance of having these investment vehicles?
Oh man, so much. I think big picture, we're moving from crypto assets being an alternative investment owned primarily from retail investors to a mainstream investment owned like every other investment in the world. And if you look at an investment like stocks or bonds or real estate, big picture, something, half or more of the market is owned by institutional investors, and the remainder is owned by retail investors. That's where we're going. The crazy thing about crypto right now is that the institutional ownership is like 5%, right? So the big impact is it's going to make crypto as an investment look like other investments, which means widely held by everyone as a small percentage of the portfolio. For that to happen, we need to see a couple $1 trillion come into crypto. These ETF flows that are so great, $17 billion, is a tiny down payment on what we need to see those ratios normalize to where they are in the rest of the market. So I think the ETFs achieve that and bring all these investors into the market and just make it a normal part of investing. I think they have another big impact, which is I do think they improve the regulatory and legislative outlook for crypto. If you think about crypto 2 years ago, no ETFs, FTX, Celsius, Luna, etc., to crypto today, ETFs, BlackRock, Fidelity, etc., you're going to get a different outcome in Washington. And so I do think that is the other big impact, and that's going to benefit, all of crypto, not just these specific assets.
Going back to your initial point on, how this is becoming just, part of a normal, average portfolio, and for that to happen, for crypto to be a percentage of most portfolios, that means trillions of additional inflows. So just to put it in perspective, like the total cryptocurrency market cap right now is at 1 trillion, I think. So that means you expect just on ETF flows that crypto market cap does that mean that the market cap should increase by, I don't know, like an order of magnitude because of the ETFs?
A lot. Yeah, a lot. I mean, I know this sounds outlandish, but let's imagine it this way.
Mhm.
Let's imagine that most assets are 50% owned by institutions. Most stocks are 50% owned. Actually, the number is higher, but let's imagine that it's 50%. The crypto market cap today, if you look across all assets, Bitcoin's about $1 trillion, but the total market cap is 2.4 trillion. And I would estimate that a tiny vanishing fraction of that is owned by institutions. Let's call it 5%. If institutions owned all of it, they would have to own $1.2 trillion of liquid crypto assets, which they don't today. That would put them on par with other assets, just if the prices didn't move. And what that means is these institutions have to buy that much crypto from retail investors who have to sell just to normalize what we see in every other asset of the market. And that's why I think you will eventually see, $1 trillion+ come into this space. It won't all come through the ETFs. I don't mean that. I don't think these are going to be $1 trillion ETFs. Those don't exist. But the ETFs will be very large. It will come through ETFs and other vehicles and owning them directly. But the reason I raise that is because what we've seen, $17 billion into Bitcoin ETFs, whatever we see into Ethereum ETFs, is a couple percent of what we need to see over the next 10 years before this normalizes into the market. And I know that sounds crazy to people, but again, think about where we were 2 years ago versus where we are today. I think it's just going to be a normal investment. And that means these institutions have to come in to the tune, literally, of $1 trillion plus based on current market prices.
Do you have estimates for ETH or Bitcoin prices for end of year or whatever time frame you might be looking at?
Yeah, we've previously put out estimates. We think Bitcoin will be north of $80,000 by the end of the year, so new all-time highs. I think it could easily be $100,000 or more, depending on what happens in the market. And I think ETH could be at new all-time highs as well, north of $5,000 by the end of this year. A lot of that depends on what happens in the election season. Some of it depends on what happens on legislative progress, crypto adoption, Fed rate cuts. But our base case is that both assets close the year at new all-time highs.
Interesting. So, and obviously part of that will be driven by ETF flows.
Definitely part of that's driven by ETF flows. We've seen a very close correlation between Bitcoin price and Bitcoin ETF flows. These are the marginal buyers moving into the market. So if these ETFs sputter, then yeah, we won't achieve those goals. If they thrive, then I think that's very possible. But I think there's a lot of reasons to think that we're on the track towards them continuing to thrive.
And you mentioned the U.S. political landscape and how ETFs might positively impact the kind of regulatory outlook for crypto. What's your take on how likely we are to have a more favorable U.S. Regulatory landscape for crypto, given it's election year?
Yeah, I should say on my price targets, of course, not guarantees, not investment advice. There's lots of risk in the market. And I think that's really important to focus on. From a regulatory perspective, I think the probability that we have a better outcome than we have today is, close to 90+%.
Oh,
wow. We've been in a very hostile regulatory environment over the last few years. And what we're going to get, regardless of who wins in November, is some element of change. Already, the Republican Party has put out a number of pro-crypto legislative positions. On the Democratic side, at least it will be a changeover in the administrative state and some refreshing there. And we've seen very strong signs recently of Democrats crossing sort of the divide to support pro-crypto initiatives. So, I'd call out the FIT 21 bill, where 71 Democrats voted in favor of comprehensive crypto legislation, joining 208 Republicans. So my base case is almost regardless of what happens in November, the probability is very high that we move in a positive direction. There's a possibility that's not the case, of course, but I think the regulatory winds in Washington are blowing in the right direction for crypto. And I think it's going to be a major story over the next few years.
Awesome. So we have this positive regulatory outlook. We have ETFs bringing in flows into crypto, so it's looking pretty good for the industry. And now going back to today's Ethereum ETF launch, you mentioned between 900 million and a billion of volume. How much of that is inflows? Because if you can just talk about the nuance there, there's the grayscale product to account for. So there were outflows on that. Like, yeah, what are actual flows looking like for today?
Yeah, it'll be really interesting to see. There are probably two important nuances to call out. The first is that volume doesn't equal flows.
Mhm.
So even in the initial days of the Bitcoin ETF launches, it was something like a 30% translation on average, if I'm remembering right, between the initial volume and inflows. So I don't mean to say we'll see $1 billion of inflows today. We definitely will not. It's some fraction of that. And then you mentioned ETH, right? ETH is the grayscale product, which converted with something like $9 billion in assets, and it's charging a very high fee, 2.5%. Others, Bitwise is at 20 basis points. There are other products out there that are in that space. So we expect to see outflows from there. I'm looking at, an update as of, let's see when I can get the numbers, as of 3 o'clock. There's about $390 million in volume in ETH. So you imagine some of that is outflows, but there's more volume in the other new products. So I think we'll see healthy net inflows. I don't think they'll be overwhelming, but I think we'll see healthy net inflows.
Do you have an estimate for inflows?
Oh man, I don't know. We're only 30 minutes from finding out, so I don't
Okay.
want to be proven wrong. But look, it'll be a strong ETF launch.
Great. And then going forward, how's it looking for other ETF products? Obviously, there's a Sol ETF application on the books. Is that likely to happen anytime soon? How about for other digital assets?
Yeah, we've seen some great firms. I think it's Van Eck and 21 Shares, firms I very much respect, file for Solana ETFs. My take on that at the current moment is it's unlikely, but not impossible. So just to break that down, why is it unlikely? The history of ETFs suggests that there's never been a spot commodity ETF, which is what these products are, without there being a regulated futures market trading alongside it. So there's the Bitcoin ETF, the Bitcoin futures market, Ethereum, the Ethereum futures market. Even before that, gold, the gold futures market, silver, the silver futures market. The SEC has always pointed to that futures market as its way to observe the space and make sure there's not market manipulation. And there's no Solana futures ETF market, right?
Right.
So from this old paradigm, there's not historical precedent for something like this gaining approval. But it's not impossible because there's no legal requirement that there be this futures market. That's not what the law says. And there's the possibility that we're going through a regulatory change in DC and their attitudes towards crypto. And so there's certainly pathways that lead to a Solana ETF in the near term or other ETFs in the near term, depending on what happens. If you step back and you ask, well, what will happen over the next 2 years? We're going to see a ton of these ETFs. We're going to see index-based ETFs, multiple product ETFs. At least that's my base case. That's what we see in markets like Switzerland. There are a lot of ETFs. And I think we're marching in that direction as an industry. But whether they'll launch in the next, 6 to 9 months, I would say that's, again, unlikely, but not impossible.
Could just spot crypto volumes be a good gauge for regulators to see whether there's manipulation, or do they require, like trading in a regulated, TradFi rails?
Yeah,
like
great
futures?
question. The prevailing interpretation is that spot crypto markets do not currently meet the regulatory bar to qualify for markets that can be surveilled. So in other words, Coinbase is not regulated in the same way as New York Stock Exchange. I think one pathway to having a wide array of ETFs would be something like comprehensive crypto legislation that boosts spot crypto trading venues to that regulatory status. In that case, we would unlock a large number of potential ETPs. So it's a very sharp question. I think that's the direction of travel. But where it is right now, most people do not think it would qualify under that standard. But again, it's not the law, it's an interpretation of rules, and those can be interpreted differently by different people.
Okay, so it's still TBD whether we see a Solana ETF or other crypto ETFs in the near term. It's not impossible, like it could happen.
Not impossible. That's right. That's right.
Okay, nice. Okay, and then just to start wrapping up, if you can just like summarize the day for today. I know we started out with you saying, you know, it was successful, moderately beat your expectations. If we see volume at close to 1 billion, yeah, what do you think the kind of the summary of ETH ETF launch day one was?
Yeah, historic. I think it's historic. We've gone from, you know, one asset being available to traditional investors to multiple assets. You know, one asset is an idea, multiple assets is an asset class. So we're really entering this era of crypto being an asset class that fits alongside stocks and bonds in the portfolios of most investors. That's a historic accomplishment. So long term, I think this is a transformative day for crypto from an investment perspective, and transformative to the industry because it moves it more into the mainstream. Short term, I'd say it moderately surpassed my generally optimistic expectations. So it's a good day short term. It's a great day long term because I really do think it's a defining moment for crypto moving into the mainstream as an asset, as an investment, and it's going to lead to long-term flows into the space.
Awesome. I love that quote. I think it was one asset is an idea, multiple assets is an asset class. So that's what we're seeing happen today. And, you know, as it continues to attract flows as a real asset class, and, you know, like you said, we should see trillions of flows come in to crypto ETFs. So definitely a historic day. And thank you so much, Matt, for joining me in downloading everything that's happening. Appreciate it.
Thank you so much for having me. Appreciate the interest, and we'll see how we close up in the next 30 minutes or so.
Yeah, we'll be watching. All right. And thanks everyone for joining.
Thanks, Cami.